Hello, welcome everyone. I'm Maggie Jacqua. I'm the Content Director for WholeFoods Magazine. Thank you for joining us today for this presentation to learn more about WholeFoods Magazine's 44th Annual Retailer Survey and also Retail Insights 2022 Retail Universe for Premium Natural Organic Food, Supplement, and Personal Care Sales. This year's survey and webinar are sponsored by Nutrisource. If you're familiar with Nutrisource, you know that they are a go-to source to help you with all areas of product development, and you can visit the website to learn more about them. Next slide, please. Just a little bit about us. As I told you, I'm Maggie Jacqua, and I'm joined by Jay Jacobowitz. He is the president and founder of Retail Insights, and he is also the merchandising editor for WholeFoods Magazine. Welcome, Jay.
Thanks, Maggie.
All right, and before we dive in, just a few little housekeeping. Some points. Jay and I are going to be presenting data and insights from the survey, and at the end of the presentation, we'll answer all your questions. Please do join the conversation. You can post your questions in the Q&A box. That's where I'll be monitoring to get those out to be answered. And we'll get to them, as I said, when we're all done with all the presenting. If you have any other comments or technical difficulties, you can post those in the chat and we'll get to those there. And now we're going to dive in to tell you a little bit of background about the survey. So you can put this in perspective. So once again, this year, WholeFoods Magazine worked with Redex Research to gather information for the 12-month period. And this year, our survey period ended in June 2021. So we did have insights into the ongoing impact of the pandemic. Some fast facts about our survey. I just want to say a big thanks to all the retailers who took time to respond to the survey. I know, we have a long questionnaire, and that's what allows us to get all this great information. As in previous years, respondents to this year's survey come from every region of the country, and they represent every size market. So this really gives us an in-depth picture of the industry. The majority of our respondents are natural organic retailers, co-ops, supermarkets, or limited natural assortment retailers, such as herbs, personal care, and natural pharmacy. We also have retailing practitioners in the mix, and doctors and wellness centers that carry natural organic inventory. So that really gives us a broad view. And to give you a sense of just the expertise we have in here and the experience, our respondents have owned their businesses for 26 years on average. And in the print edition of the retailer survey, which is our March issue, we have a lot of retailers who really shared their feelings on everything from supply chain challenges to COVID-19 restrictions to staffing issues and more. A lot of valuable insights for everyone in the industry. So I encourage you to check that out and read in their words how they were impacted. But so this slide just shows you who we have here responding. A little more background to keep in mind on the survey before we get into our bottom line on the numbers in the next slide here. So each year we have a changing group of retailers responding to the survey, and we compare each year's survey respondents to the prior year's respondents. We also ask retailers to tell us how they did compared to their own same store sales compared to a year ago. And Jay came up with a great analogy for this. He says the annual survey is like sampling a glass of vintage Cabernet. So each year we taste from a different vineyard. That's our different group of respondents that participate in the survey. But since we're also asking the respondents to tell us about their own year's prior results, that is more like sampling two vintages from the same vineyard. So that kind of helps you see how we set this up. Next slide. You'll see that given this survey covered 12 months ending in June 2021, as I noted, we really see the impacts of the pandemic. So in last year's survey, which covered a span at the beginning of the COVID-19 pandemic, net profits were 5.02%. This year, net profits declined nearly 2 percentage points to 3.05%. And when you factor in all the pressures that independent natural organic retailers faced in the last half of 2020 and the first half of 2021, we're saying remaining profitable is a significant achievement. So now I'm going to turn things over to Jay, and he's going to give us a look at the bigger picture.
Thanks, Maggie. So the slide that you are about to see is the pie chart of the total natural products retail channel in the United States. The Retail Insights universe, which we will address in depth, this entire pie chart, at the end of our presentation today. But for the moment, the slice of pie, the orange slice that's sticking out there, 11.97%, is the independent natural products retail channel, 11.48 billion in sales. And that is the group that we asked to respond to the survey. So we'll be addressing their concerns, their responses in the early part of our presentation today. Next slide, please. Stores in this year's survey were about the same size as last year in Group 1, about 10,000 square feet. But stores that qualified in Group 2 this year, which carry 30% to 49% fresh perishables, shrank in size compared to last year at 7,300 square feet this year versus 9,400 square feet last year. Stores in Groups 3, 4, and 5 were all significantly larger this year than stores responding to last year's survey, reaching 1,800 square feet, 3,100 square feet, and 5,000 square feet, up from 1,100 square feet, 2,100 square feet, and 3,500 square feet last year. And that makes up for some of the difference in productivity per square foot. Because of the larger stores, they obviously sold less per square foot while keeping pretty much the same absolute total sales. Sales were remarkably similar in all 5 groups, but the sales per square foot drifted down a little bit because of the larger size. Next slide, please. So in order to understand the survey, we look at fresh perishables, and that includes really 4 of your departments: fresh produce, frozen foods, prepared foods, and refrigerated foods. Next slide, please. The way to understand and get the most out of the survey is to go ahead and tally up those 4 departments and to see what percentage of your total sales those 4 fresh foods departments reach. Then you can compare that percentage of perishable sales to Group 1, which is a high perishable store with 50% or more of sales from fresh foods, all the way down to Group 5, which is essentially a vitamin and supplement store, which may have 1 refrigerator of probiotics, but little else. And so virtually 0% perishables. So once you understand your total perishables, you can find out which group you're in, and that is the relevant group for you to track all the way through the survey. Don't pay attention to or try to compare your store to results in other groups because it's not as relevant. Next slide, please. And so here was the breakdown this year. Fresh perishable stores in Groups 1 and 2 are maintaining or increasing their fresh foods as a percentage of sales, while smaller stores in Groups 3, 4, and 5, those with 30% or fewer than 30% fresh food sales, are actually decreasing the amount of fresh foods they have. Next slide, please. So you can see it illustrated here, the variance. The large stores in Groups 1 and 2 sold slightly more fresh perishables, but stores in Groups 3 and 4 started exiting the fresh foods business. And this is something that we have been observing over the decade or so that we've been doing the survey. Retail Insights has been participating in the survey. And that is that in the middle, where you don't really have a majority of sales, or at least a strong plurality of fresh food sales, you're kind of in a middle space where you're not big enough to attract daily or weekly shoppers. And so we're beginning to see this. It became clearer that in this year's survey, and more than any other year's survey, where the stores that really don't have enough fresh perishables are beginning to learn that that is not helping them, and they are beginning to reduce the amount of fresh foods that they have. Next slide, please. So here's just an illustration. The green line starting on the upper left Perishable sales exceed 60% in group 1, our high perishable stores, and they drift down to 0% in group 5, our vitamin and supplement stores. The orange line, which you see starting on the upper right, vitamin and supplement stores grow from single digits in group 1 in fresh food stores to nearly 70% in group 5. And that's just a visual to show how both stores, very different types of stores, exist in the same natural products industry. Next slide, please. So because vitamin and supplement oriented stores in groups 4 and 5 were larger this year in footprint, they had room for more departments besides vitamins and supplements. And so as a percentage of sales, they sold fewer vitamins and supplements than previous year's survey. That's why you see the numbers down 6.98% for group 4 and down 10.83% for group 5. But that is simply because they were larger footprint stores and they had more room for other departments besides supplements and vitamins. Next slide, please. This year, labor as a percentage of sales went up to 19.93% from 18.52%, so about a 1.5 increase over last year's survey. Most other key profit and loss items were similar, but net profits, as Maggie said at the beginning, in this year's group shrank to 3.05% from 5.02% last year. Next slide, please. We also track sales per square foot, both of the retail area and of the total gross lease area. The largest fresh food stores in groups 1 and 2 also had the highest sales per square foot, reaching $809 and $715 respectively in their retail areas. And as you can see, there's a high correlation between how many perishables you carry and how many sales per square foot you generate. Next slide, please. Annual inventory turns increased as the amount of fresh perishable sales increased. And we can understand that if you're selling vitamins and supplements, they have a long expiration date, 2 or 3 years. Whereas if you're selling lettuce and celery, you've got maybe 4 or 5 days to sell it. And so we see that in groups 1 and 2, the annual inventory turns are 15 to 18 times per year. And the vitamin and supplement stores in groups 4 and 5 are less than 10 times per year. So at the very smallest stores, group 5, turning 4.92 times per year, taking nearly 11 weeks for one full inventory turn. Next slide, please. Maggie?
All right, so thanks, Jay. In this chart, we're looking at store traffic, and we can see that those large group 1 stores, they're seeing a lot more customers, 475 customers per day, with an average basket size of just over $38. And then we go down to the group 5 stores. Those are the smaller stores that are focused more on vitamins and supplements. And they're seeing around 50 customers per day, but those customers are spending more with an average basket size of just shy of $42. We also in the survey asked respondents about their online presence. We know that throughout COVID, shoppers did shift online. You know, at the beginning of COVID, that was out of necessity. And then as one retailer pointed out in the survey, they kind of learned to shop online, and people were losing, you know, retailers were losing shoppers to, you know, that convenience of shopping online. But that said, we have 65% of our respondents who did not do e-commerce. And of those who did, 21% of those who did generated just 9% or less from e-commerce sales. In the next slide here, retailer feedback. We got a lot of retailer feedback in this survey, and it's really worth reading the print issue to see a lot of what we heard directly from retailers. We did something different this year where the first question, we just invited people to tell us, you know, what is on your mind, whether it's things you want to celebrate, challenges you want to talk about, opportunities, anything that they want to sound off on. We really heard about supply chain issues being just a major pain point. Demand was there for supplements, as we all know, but retailers were having trouble getting the inventory. We also heard from several retailers about the struggles of just being a small independent. Minimum advertised pricing came up, and the fact that it's really not being enforced online, with manufacturers favoring online accounts and larger chains. And we had several retailers talk about, the fact that it's the independents and the smaller stores who really helped build this industry and create this way for so many products to go out and grow, and feeling like the support wasn't there. And I thought this quote summed up some of those pain points, where this retailer just said, I'm dropping companies that don't have my best interest in mind. And that reminder there that it's the independents who helped build this industry. So I just wanted to throw that out there as an important thing to keep in mind. And there's more that we hear from the retailers in the print survey. Okay, so in our next slide here, we're looking at increased options for shopping and delivery. We know that there's been this increase in demand for online to COVID. So this year we expanded our survey to ask about a full variety of delivery solutions that stores have devised to accommodate this desire for convenience and safety, looking at especially during that COVID period. So we saw that pre-orders with curbside pickup was an option that the majority of stores did offer at 60%, phone, email, and text orders 56%, and pickup pre-orders in store 44%. So really allowing people to have the store experience, but have these other options during COVID for getting their goods. In the next slide, we're going to look at education and outreach. And one of the things we really saw throughout the survey is that apathy is out. So last year's survey, 7% of respondents reported that they didn't use any supplemental educational materials. This year, all respondents invested in some form of outreach, so that is great to see. Email newsletters are popular. 71% of respondents are reaching out that way. Educational handouts are big with 67%. And demos and in-store sampling are back with 62% of stores offering that. And also social media and blogs, 57%. And I just want to say on that front, at WholeFoods Magazine, we really love to follow your retail, your store blogs, and your business social media. So if anybody wants to drop in the chat about your handles, and we'll get on there and we'll follow you guys. We'd love to see what everybody's up to. So definitely keep us in the loop there. And we also heard some new things that retailers are doing. One retailer was trying out text message marketing. So that's another trend to watch. And now I'm going to turn it over to Jay to talk about sales.
All right. Thanks, Maggie. So what was interesting to me in this year's survey, and confirming what we've seen in past year's survey, group 3, the group that's in the middle, these stores this year were 5,000 square feet, and they had between 20% and 29% of their sales from fresh perishables. We consider this size and this percentage of perishables to be no man's land, because it's not enough fresh foods to attract daily and weekly shoppers, but still requires a significant amount of fresh foods in refrigerators and freezers. These stores saw declines in sales in nearly every department in this year's survey. As you can see, supplements and vitamins declined, packaged dry grocery declined, refrigerated foods declined, frozen foods declined, and next slide, please. Fresh produce declined, prepared foods declined, bulk foods declined, non-foods and households went up a little bit, but overall, there was a decline of 1.39%. Of all the 5 groups, it was the only group to show a year-over-year decline in sales. And I would just say that this proves what we have been theorizing all these years, that you either go big in perishables and have a bigger footprint and get daily and weekly shoppers, or you really scale back on the perishables and focus just on vitamins and supplements in a smaller footprint. Both are formulas for success, but in the middle, it's a tough place to be. Next slide, please. Labor costs per hour went up more than $1 in all groups except group 1, which is our large perishable stores. We believe this is perhaps because, as Maggie was explaining, this year's vintage from a different vineyard included some smaller chains that we believe perhaps were more successful at controlling compensation compared to the group 1 respondents last year that may not have been as methodical in doing so. One of the unique variables that we report in our survey is how many full-time employees per 1,000 square feet it takes to run a store. And basically, if you are a Perishables store, it takes about 4 employees, full-time employees per 1,000 square feet to run your store. If you are a vitamin and supplement focused store, it takes about 2 employees per 1,000 square feet. So there's another stark difference between the 2 types of stores, and something I think is very valuable to understand when you are creating your next project, expanding, or planning to add departments. Next slide, please.
All right, thanks, Jay. So looking at what retailers are investing in, this year we had 14% who had expanded or remodeled in the last year. The average expansion was 600 square foot at an average cost of $15 per square foot. So looking at what was remodeled or expanded, the focus was really on 4 departments: vitamins and supplements, personal care, refrigeration, that included grab and go, and service and practitioner areas. And then to a lesser extent, frozen food, non-food, and household and pet products. So where the money didn't go, which is not really a surprise during COVID times, was juice bars, deli cafe, and also bulk departments. In the next slide here, we're going to look at what people are planning for the future. So we had 12% of respondents who said that they plan to expand or remodel this year. Average expansion would be 700 square feet with an investment of $10,000 on average. So this year, which departments are getting an update? 20% are looking at non-food, and we have 15% looking at vitamins and supplements. And then some retailers are turning their attention back to those juice bars, delis, and cafes now that things have opened up and restrictions have eased. Still not spending money on the bulk food department, but money is being invested in frozen food, refrigerated personal care, and household and pet, getting some attention here. And then also 15% on fresh produce, the grocery, and then the service and practitioner areas. So another thing we do here is looking back. So as of the end of June 2021, 31% of stores had increased their total sales. 24% of stores reported that they stayed about the same. And then 45% of stores registered declines in sales. But in the next slide, we do show that people are optimistic about the future. So 93% in total of respondents said they expect sales to increase or to stay the same, 30% with the increase, and 63% saying they just think they're going to hold steady. And then 7% of stores are actually forecasting a decline. So up next, I'm going to turn things over to Jay for the bigger picture of the industry. And just a reminder that you can submit your questions here, and we'll get to those at the end. But now Jay is going to present findings from the retail universe.
Thanks, Maggie. So Retail Insights each year tracks 8 retail channels in the United States that sell natural and organic products. Supernaturals like WholeFoods, compact grocers like Costco, conventional supermarkets like Kroger and Safeway, independent retailers and co-ops, which is the subject of our annual survey in Whole Foods magazine, compact grocers like Aldi and Trader Joe's, natural grocers by Vitamin Cottage. These stores, we identified this category in 2012. Stores that were up to but not exceeding 20,000 square feet, we believed would be a very, very flexible size that could be slotted anywhere in the country, in big cities and urban areas and suburban areas as well. And it's turned out to be the case. And this is a growing category. We'll talk about their increasing market share this year. We also look at mass merchandisers like Walmart and Target, also pharmacy chains and independent pharmacies, and lastly, vitamin chains like GNC and Vitamin Shop. Next slide, please. Don't strain your eyes on this. I'm just showing you the full 8 channels in the full table that you can access either in print in the March issue of Whole Foods magazine for the 2022 Retail Insights Retail Universe. You can also access online. Next slide, please. So at the top of the first three categories that we look at are club stores, which like Costco and Sam's Club, which have about 7% natural organic market share, and that market share grew 8% this year. The next category, compact grocers, as I mentioned to you, stores that are up to but not exceeding 20,000 square feet and include Aldi, Natural Grocers by Vitamin Cottage, and Trader Joe's. This group added 5.5% in sales, just over $1 billion in new sales, and they reached 19.3 billion and a 20.29% natural market share. So that slots in just behind the supernaturals, Whole Foods and Sprouts and the like, and edging out conventional grocers like Kroger this year for the first time. So the compact grocery category is a really important category. Independents and co-ops, the third group in this slide, which, and again, as I said, are the subject of Whole Foods Magazine annual survey that we just covered for you in detail, grew just about a percentage point, 0.7 percentage point, and maintained its fourth position market share of 11.97% and $11.4 billion. Now you'll notice that after the fourth place, there's sort of a break here between the top four market share, which ends with co-ops and independents, and the bottom four, and we'll be looking at those in the next slide. So here we look at mass merchandisers, which are Walmart and Target. They also grew about 8% this year, and they tuck in just behind the club stores, Costco and Sam's Club, with 6.23% natural market share and 5.9 billion in sales. Pharmacy chains and independent pharmacies have a 4% market share, so quite a bit lower than the top four group, and they grew 4% this year as well to 3.88 billion. Conventional supermarkets, the next channel, growth slowed this year to just over 3%, to 18.1 billion, giving up second place to the compact grocers and settling back in third place with a 19.03% market share. And finally, supernaturals maintain their number one market position, or 29.1%, with 27.7 billion in sales, but growing at just 1.45% year over year. So slowing growth in the supernatural segment. And finally, vitamins and chains continue their multi-year slide, losing market share and more than $500 million decline as GNC closed more than 1,000 stores this year. And they've been in last place in 8th position of the 8 channels that we follow for several years, but now they just reached 2.3% of sales. Next slide, please. So overall, US natural organic retail sales grew by 2.58 billion, or almost 3%, 2.79%, to 95.3 billion. But it is interesting to note that had GNC not closed its 1,000 stores, and if we just take them out of the results, natural organic sales actually grew more than 3%. They grew 3.34% and over 3.1 billion. So we took a $500 million hit from the vitamin chain channel GNC. So compared to total food store sales, natural organic market share reached 12.22% of the 780 billion total grocery market, reaching $654.55 per gross lease area square foot, with 1,195 square feet average square footage for every unit in all 8 channels, and $781,000 in average sales per unit across the entire 121,000 units that we are following in the Retail Insights universe. Natural organic products are nearly 3 times more productive per square foot than our food stores overall, as we have a 12% market share, but need only 4.5% of the total square footage allocated to natural foods to achieve those sales. Next slide, please. Maggie?
Right. Yeah, thanks, Jay. So keep your questions coming. We have a bunch of questions here that we'll start to get through now. First question is, will the webinar be available on demand? And yes, it will. I mean, we understand that doing this in the middle of the day, retailers are very busy, so this will be available on demand. We should have this up for you next week. And we know we have a lot of people who registered so that they could access the on demand. And we definitely encourage everybody, thank you for joining us live. Share the news about the webinar so that your colleagues can watch it on demand. We want to make it convenient for you, of course. Okay, so Jay, question here. Is there an optimal store size?
Well, great question. And as you can see, because we are a bifurcated industry model with either you're a fresh store, more or less, or you're a vitamin and supplement store, more or less, the answer is different depending on which it is. So I would say with the success of the compact grocers that we've seen, Aldi, Trader Joe's, Natural Grocers by Vitamin Cottage, those stores are 15 to 20,000 square feet. That's a pretty successful size. And Sprouts is another example, whereas their new management has taken down the footprint of those stores from around 30,000 square feet into the low 20,000s, like 23,000 square feet. So if you're going to have fresh foods, I would say your optimum range is somewhere between 15 and 20,000 square feet. If you are a vitamin and supplement focused store, I would say you probably, depending on what you're going to do, where you are, what your per square foot costs are, up to 3,000 square feet is probably your upper limit that you want to think about. But as we saw in the survey, group 3, right in the middle at 5,000 square feet, it's neither fish nor fowl. It's neither here nor there. And they struggle having too little square footage to be convincing in fresh foods, too much square footage than you need to have just vitamins and supplements.
All right, great. Question here about pickup and delivery. Are most retailers charging for pickup?
At the independent level, I don't think so. And there are some examples of larger stores. I think Hannaford in the Northeast just ceased their charge for pickup. I think it's not sustainable. I think that because they're battling the Amazons and the Walmarts of the world, that they really have to do something to attract that business. And so I think we are not going to see charges for pickup. Delivery is a different issue. Delivery, everybody understands, the consumer understands that they're going to pay an upcharge to have delivery one way or another.
Right. Okay, so kind of a little conversation, a couple of comments here, but maybe we could talk about this a little bit more just to clarify it. So there was a note that it seems odd that stores with higher supplement sales have lower sales per square foot, but then noted that the slide shows much higher traffic in stores with higher fresh sales. So maybe you could just comment on that about the higher supplement sales in the stores with the lower square foot and just talk us through kind of what's explaining the sales numbers there.
Yeah, I'm glad I get a chance to clarify. It's lower sales per square foot because the stores were larger. Last year's survey, the stores in group 5 were 1,100 square feet. This year they were 1,800 square feet, so a 50% increase in square footage. So even just taking the same amount of sales and divide it out over 50% more square footage, you're going to have lower sales per square foot. But the absolute total dollar sales were actually quite similar.
All right, great. What is your advice, Jay, for retailers who are holding out on delivery and online ordering?
If you don't have to do it, don't do it. I would say, as always, even before the internet, stores always offered pickup, and stores always offered UPS shipments to longtime customers that moved away and couldn't find their favorite supplements. I would say continue to do those things. Continue to answer your phone and take orders over the phone and prepare them for people to come pick up at the store. But to get involved with delivery, I think is a really slippery slope, because what are you doing? A, you're rifling your profits because you're sharing them with a third party. Or if you're doing it yourself, you're paying your employees, you're getting into the distribution business, and you're taking on all the liabilities associated with that. So you're going to have a smaller margin for anything that gets delivered. Number two, the other drawback is, what happens when the customer can just reach out to you, order something, but never come into the store? You are reducing, by definition, visits to the store when you're doing delivery. So I think that the burden on independent retailers is to provide a really interesting shopping experience physically in the physical space. That's your job. Make it beautiful, make it smell fresh, make your people engage with customers, have interesting products that are hard to find, and make it a beautiful space. And I think have faith that our human nature is we can't just shut off 100 years of our shopping DNA and transfer completely to online. I would not be afraid that that's going to be the case. Brick and mortar is going to be here. In fact, we see many examples of pure play e-commerce companies realizing that it's actually cheaper today to get new customers by having a physical footprint. It's so expensive to advertise and get eyeballs online and paying the ad costs that are just outrageous. And as you know, even Amazon raised its Prime subscription, I think, to $139 a year now to help cover some of these added costs.
Yeah, excellent. It's such a good point. You just want to be in the stores, feel it, experience it. And also, as was pointed out by some of the retailers who responded, the service that the retailers are giving in the store, answering the questions, and just giving that added expertise to your whole shopping experience as well. And I think you answered this next question already, which was basically, are retailers getting a good value out of using third-party delivery services?
Yeah, I think, as I said, it's a slippery slope. It costs money. You are inviting the camel's nose under the tent, and you are going to be sharing your data, your customer data, with a third party that really doesn't have any loyalty to you. You're also losing your brand. You're outsourcing your brand equity to a third party delivery. If that third party delivery person, there's something off about them, maybe they've snuck a French fry out of the order or whatever it is, you are trusting a third party to carry your brand equity, and it's not a smart idea.
All right, great. Any other questions, please send them our way.
I see a question here, Maggie, in the chat. Somebody asked about net profits or sales increase. And so I think we had a question from one of the attendees. And I think if by that you mean, did net profits increase, which, as we said, as a percentage basis, they did not increase. They declined about 2 percentage points from about 5% last year to 3% this year. But sales did hold steady or increase within every group, all four out of 5 groups, with the exception of group 3, that 5,000 square foot store in the middle that only has 20 to 30% perishables, that no man's land that we talked about, of being not big enough to be a daily shop and not small enough to be profitable, or just selling vitamins and supplements. So net profits were down as a percentage, but more or less held steady on an absolute dollar basis.
Great. And yes, we've already got the comment that clarified it there. So thank you for that. So we have one more question here, which is, so Jay, the Whole Foods magazine has been doing this survey for 44 years, and you've been doing it for many years. So over the decades of conducting the survey, what trends have you been most surprised by or most pleased by seeing?
I think it's the resilience of the brick and mortar independent natural products retailer. You take a look at the independents and co-ops that we focus on in our annual survey in Whole Foods magazine, and these folks, you folks mostly, I assume, that are listening in on the survey and on this webinar, are really the soul of the industry, because you are true believers. The authenticity stands out in vast difference compared to the other channels of retailing. Yeah, you can get pretty much most of the product line that you offer in all 7 other channels. You can also get it online. But what you can't get is that understanding of the products, the belief in the products, the ability to explain them, and I think most importantly, the permission to engage you, the consumer, in an intimate personal question about, or discussion about, your health. And to do that responsibly is a gift that I think is only really available in the independent natural products retailer. So I would say the resilience of the independent natural products retailer is what has given me hope over all the years.
Absolutely. Excellent. Well, that is all the questions that we have coming in. So I just want to thank everybody for joining us. If you review the slides and more questions come up, you can email them to us. My email is up there on the screen, and we'll get those addressed. For any retailers who have joined us, we hope that you'll participate in our 45th annual survey. If you didn't get the survey questions last year, you can just email us and we'll get you added to the list for this year. We send the questionnaires out in like mid-July, August, so you can watch for those. Again, we're so appreciative to everybody who takes the time to fill this out and give us this data so that we can help educate the industry. If you'd like to rewatch this webinar or share with your colleagues, as noted, it will be available on demand. And again, our thanks to Nutrisource for just being so committed to education and information that they sponsored this survey. Again, for more information there on the next slide, everything is available in this issue, along with more that we discussed here, and there's expanded coverage also on WholeFoodsMagazine.com. And while I have you guys here, I'll just take a quick minute to tell you about another educational opportunity. Whole Foods Magazine and Trust Transparency Center hosts the Naturally Informed virtual events. This is what we have coming up for the rest of the year, and registration is open on naturallyinformed.net, so you can register there. And also at Whole Foods Magazine, as always, we are committed to keeping you educated and informed. We have our newsletters, we have our Natural View podcast, and our social media, so we hope that you will follow us to stay in the loop on all the latest industry news. And we just thank you all for joining us. Have a great day. Thanks, Jay.
Thanks, Maggie.